This is my strategy for the end of the year and going into 2025 with the S&P 500, which is all I own on my brokerage account, and Coca-Cola, which is where I do my trades. I trade on my IRAs because I trade tax-free. No point trading on your brokerage account. You simply pay 20% tax every time you trade. What's the hell's the point? You want to trade on your IRA. So, first of all, my brokerage account is pumping up. As you can see, I'm up 46%, made $33,000 this year. It's been a phenomenal year. I'm all in with margin. I've got just over $210,000 invested right now. This is my path to $1 million. I'm not buying anymore. I bought that last little dip. You can see that little dip. Can you just sort of see that dip there? I bought that dip there with margin. I bought an extra 10 shares about 2 weeks ago on that dip. That made sense. I only buy the dips with margin, and when I do that, I go all in. I'll buy sometimes 30, 40 shares or whatever. I've got nearly, is it 400, 380 shares now of the S&P, something like that. Anyway, I'm not buying any more at the moment. We're rallying. We're up. There's still plenty to go, though. Maybe 5% by the end of the year, another 10% next year. So great. Just let it run and just concentrate on paying down the margin as time goes on. And if we do get a big drop, by that time, I'll have more available margin to buy more. That's the brokerage. That's what I'm doing. Absolutely nothing other than buying dips with margin and doubling up when it goes down. If it doesn't, absolutely nothing. Okay, that's that. What about my Roth IRA? This is where I trade. Well, I bought Coca-Cola, didn't buy the bottom. I wasn't trying to time the bottom. You might say, well, of course you was. Everybody wants to buy the bottom. I'm not really bothered. I just want to make a profit. I'm not trying to time the market, because if you try to time the market, you'll always miss it. Great businesses you just want to own, make money from. It's simple. I don't try and time the top or the bottom. I just buy it when it's when it's oversold and it's undervalued. Well, Coca-Cola, in my opinion, is one of those businesses because the future of Coca-Cola is fantastic. I'm very, very happy with the balance sheet, very happy with the business and the growth. But it's consolidating. This is what happens as institutions drive this stock. I think they own about 70% of it. So they're consolidating, messing around with each other, trying to rinse out all the retail investors, and then it will take off. So I've been buying. I went all in. I bought $28,000, which is now worth $27,000, $423. I went all in. Wasn't messing around at all. Went all in. It went down another 4% over the next couple of weeks. Doesn't really matter. So what am I going to do? I'm not going to buy it on my brokerage account because I don't want to use my margin because I'm all in. So I'm only using margin right now. I don't want to use that to buy to buy Coca-Cola because I don't want to own it forever. I want to be able to hold the S&P forever. So I'm not doing it on the brokerage account. So what am I doing then? I'm all in on my Roth IRA. I can't buy anymore. If I show you my IRA, and I show you my contributions, ever since I started this, I'm maxed out. 22, look, I'm maxed out in 22. I can't add any more. 23, I'm maxed out. I can't add any more. Look at all these 3% matches. 240, 2004, I can't buy any more. I'm all maxed out. So what am I doing? Well, it's quite simple, really. On the 1st of January, midnight of the 1st of January, I'll be up late when everybody else is asleep, and I will transfer 8,000, it may even be 8,500. It often goes up, as you just saw there, from my brokerage account using margin, paying 5% because the rates are coming down all the time. They're going to get less and less as well. Another one in December. In December, it'll be even lower than that. I'm going to transfer $8,000 or $8,500, whatever the maximum amount is, into my Roth, get a 3% match. So straight away, 5% is now costing me 2%. I'm very happy with that because that will make me the money with the dividends alone. And hopefully, fingers crossed, it'll remain 4% down between now and January the 1st. And I'll be able to buy it at a 4% discount from where it is now, which would suit me. So I would put the full amount in, and in a couple of weeks' time, I will receive about $220, my first dividend payment. That'll be in there, tax free. So that'll bring my $1,000 loss down to about $800. If I just kept it for the year without any growth at all, I would get back my loss. I'd be back at zero again just by holding it for a year. But my plan is this. end of November, December, the X date is in November. In December, I will get my $200 and something for my Coca-Cola, bringing my $1,200 down to my $1,000 down to $800 or thereabouts. January the 1st, hopefully it will remain down. I'll add another 8,000. That will bring the average down to about 2.5, 2 3/4 if it's where it is now. Because obviously, if it was 28,000 I was adding, it would halve it. But adding 8 won't halve it, of course. So from 4% down, probably around about the 2.75, 2.8, something like that down. Fine, doesn't matter. Another quarter in, I would have 200 plus the other bit, so it would probably be about 220, 230. So now I'm getting close to my wash, and then we got the rally. That's my strategy. Now, what if it does go up between now and January the 1st? Because I can't put any more money in until January the 1st. It won't let me. It's not that I don't want to. It won't let me. I'm not allowed to. So what do I do if it goes up between now and January the 1st? Well, if it goes up back to where I bought it, so up 4%, I will still buy it because I was happy with it at that price. I will still add the 8%, the $8,000 or 8.5, whatever it might be. It would be better if it stays down, but it doesn't matter either way. I'll be buying. What if it's gone up 3 or 4%? Well, it very well could. Then I won't. What I will be doing is I'll be looking for an entry back into the S&P where I can build my S&P again, because that's where my Coca-Cola is going once I've traded it. And the reason why I bought Coca-Cola is for me, it's a better return over the next 6 to 9 months because the S&P now is about to cool down. We will enter a bear market in about 12 months, and we've had a really good rally. I've done very, very well. And before the rest of the market all decide to start taking profits and we enter a bear market, I already want to have made my positions. Just like I called the bull market before anyone. I was saying we're in a bull market months and a year before the banks. The banks need 6 months of verifying 2 quarters of a rally of gains to confirm a bull market. Of course, that then tells you, well, there's nothing clever about being a bank and telling you what we already know. The clever part is to identify we are already in it before everybody else tells you. So the same thing with the bear market. I want to be having my margin near zero by the time we hit a bear market. I want to be in the right position. I don't want to be waiting for the moment, waiting for signals, waiting for someone to tell me, because by the time they tell me, we've been in it the last 6 months. Not interested in that. I'm interested in identifying where we are, when we are there, not in the future, looking back. Always looking forward. So that's my strategy going into from 24 into 25. If it goes down, if it goes up, I've got my plan, I've got my strategy, I know exactly what I'm doing. And ultimately, my plan is, and do you think I can do it? I'm going to put a poll on my community tab on YouTube, on the homepage. I'm also going to put it on X, but our community tab on YouTube is by far more popular. Go and vote. Will I get, by the end of the year, to $150,000? I believe I will, and I'm doing everything I can to get there. If I have to trade Coca-Cola before the end of the year, should it pop up 4 or 5%, I will. But my plan is, and I believe I will be at $150,000 at the end of this year. It also means making tons of videos and trying to earn as much money as possible from YouTube. I know what I'm going to get paid in November. It's $1,100, which is what I earned in October. I get paid in 10 days from today. However, what I do in November is what I get paid in December. So if I make 1 million videos and get 1 billion views and I can earn some more money, you never know. I just might be able to add more than I did in October on December the 21st, just in time for the end of the year and a nice Christmas present. I'm hoping I'm going to make as many earnings and as many videos as I can and do as much as I can and add that to it. But I'm expecting to earn about $2,000 in November for December. So that'll only give me 3. I've got the 1,000 now. Add the 2. That'll take me up to 134, 134 and a half. So as you can see, I'm still a long way short, but I do believe those gains will come in the S&P and perhaps even my Coca-Cola. We shall see. Do you agree? Go and vote on the poll. Will I get to 150,000 by the end of the year? Click above my head for all the links down below in the description. I shall also pin everything to the comments as well. Over here, I shall put some more links for you, videos that you might find useful. Until next time, as always, take care of yourselves and each other.